Hello everyone and welcome to today's session. So today what we are going to do? Today we are going to solve some questions on chapter number 13 as I promised in the last session so that you can have a quick revision of what we did in the last session and then we will proceed to the new chapter. Okay, so we'll take few questions for the chapter number 13 group audits. It will kind of serve as a revision point of view and then we'll proceed for the chapter number 14. I hope meanwhile you guys have read the chapter because that is very important and that is must and required for you to better understand the chapter. Okay, so let's go through and read few questions and solve some questions on this. Okay, so let's take first question. The first question is, during the audit of a consolidated financial statement of XYZ group, you notice inconsistency in the accounting policies used by several subsidiaries. For example, a subsidiary A uses the FIFO method of inventory valuation while no answers. I think you guys have not. Okay, no issues. I'll tell you. See, this is the point where we discussed about, remember that when there are different accounting policies, we have to go for harmonization of the accounting policies or differences. If there is a gap difference, then we need to audit those gap differences. Reason, because what will happen is, let's say there are gap difference. Okay, so what management first of all will do is management will take the financials. Okay, take the financials of the component. So let's say these are component financials required for the purpose of consolidation. So they will prepare another set of financials by just passing relevant adjustment, accounting policy harmonization as adjustments. You can say converted financial statement will be prepared, which will be given to you as a group is to converted financial statements, original financial statement plus the audit report on the original financial statement. So if you have the audit report on the original financial, okay, so you get a comfort on this particular one. Now you need to audit this particular part, adjustments, so that you can get a comfort on the converted FS. Your responsibility will be to perform the audit of or to take the comfort on the gap adjustments, harmonization of the accounting policies. Okay, you need to understand in this scenario, okay, what are the risk involved? Is there any risk of material misstatement when it comes to the risk adjustments or gap, or the adjustments are adjustment or even the component, even material. So all these things you need to think of, and then on the basis of that, you need to perform your audit. Yes or no? Clear with this? Anyone? No? This was the the steps. And if I talk about in the terms of steps, how will you proceed is this: to review the instructions that were given, to understand what kind of financials you have in your hand. You need to obtain explanations with respect to the adjustments. You need to perform the compliances with the accounting policies, means that whether which of the accounting policies are being complied and which are not being complied, mean which are differences. So this is kind of, you can say, it's a gap analysis. Okay, then you need to perform additional procedure to understand if there are any further calculations or further evidence you need to test those adjustments. You need to, if there are inconsistencies, then you need to suggest them to rectify. If there are not, then obviously we will proceed with the rest of the audit procedures. You need to communicate to the management. Communication is always there. You need to document those things. Okay, so this is some audit steps that you need to perform. Any doubt with this? Any doubt? Yes, no? Okay, no doubts. Good. If no doubt, let's proceed further. Okay, we will take one more question so that we can understand further on this line. During the audit of ABC Group consolidation financial statement, you discovered that a significant subsidiary located in the foreign parent, the gap used by the parent company. What are the potential audit risks associated with this situation, and what steps would you take to address them? So there is one subsidiary which is not here. Now what you will do? Take as a group auditor, as a principal auditor, you should do in this scenario. What is your responsibility as a group auditor or principal auditor? Anyone? Sorry. Yeah. Anyone? Any answers? You can write in the chat box also. Perfectly fine. No issues. If anyone wants to answer. No? Okay. Apart from, let's say, at the start of the audit, you will send instructions. That is fine. But now you are at a situation where you don't have the financials available for that particular entity. What will be your steps? What you will do in this scenario? Basically, let's say, for example, for time being example, I have a component, okay, component S1. Now, let's say this particular whatever S1 component is there, okay. Now, this component is material, okay, and there is another component which is component S2, okay. Now, let's say, for example, this S2 component is also material, not material, rather. I'll write it down so that you can understand. So, let's say this is S1, S2. Now, let's say both the financial information for the both are not available. So, finance are not actions, or rather steps that you will take in both of the scenario. One by one. Let's go for first S2. Don't have financial information available for S2. What will be your steps that you will take as a group auditor? Come on, guys. Financial information for the both S1, S2 not available. Anyone? I have made it very simple. I hope you got the question now. Yes, no? Anyone? I'm okay. So, what will you do? Financial information is not available to you. What quickly? You guys have not revised it. That is not good actually. Okay, let me tell you. See, okay, and that particular subsidiary is, you can say, it's not material. Now the materiality, you have to features. But let's say if I'm not able to get at the end the financial information. So remember the last time I showed you one example, this one. We will go back to this reporting example and we will read something again. So here it was written, see, the financial statements and financial information of 3 subsidiaries and 11 step down. So this has not been audited by anyone. And then out of that, over here, wait a minute. This is not audited. There was one particular one more where it was not available. Okay, if you see here, what they are saying is that in our opinion and according to information given to us by the management, these financial statements or financial information are not material to the group. Means what they are saying is these particular financial statement in this case were not audited by any of the auditor, and it was given just like in our example, instead of having a non-audited financial statement, we don't have information. Okay, so it will not make difference, but at the end you don't have a, it is not material, they are not material. As a result, you will report in other matter paragraph about this. Only see you case the data and everything is that we can have a good understanding of the topic. I have received your answer. So it is on in line with what we discussed that, okay, yes, it is in line with what we have discussed. So we'll disclose that we have not received any audit evidence. It is not a material. That's why our opinion is not modified. Yep. So let's see one more question. During the audit of the consolidated financial statement of MNO Group, which operates in multiple countries, evidence regarding the financial information, principal auditor relied heavily on the work of the component auditor. However, you have doubts about the components auditor's competency and independence. Discuss the audit implication of this situation and outline the steps that you would take to address them. Okay, what you will do in this scenario. Problem. Since there is a doubt on the component auditor's competency, the auditor cannot rely on the work of the component. Okay. But doubt, like, about now there is something which is relevant to the asset. When it comes to the activity of the component audit or pronouncements that are for this particular thing will give me understanding. Okay. So here, if you see in the question, what is given this? That you as an engagement review partner, so you guys can understand. Now remember, can anyone tell me? Matters. I'll come to the point of time from the auditor. So remember, there was certain criteria that we discussed for the key audit matter. Now, of good estimation, management judgment was involved, management biasness might be there. So these kind of things were there. Means these were the critical areas. And impairment of plant, property, and equipment. Okay. Impairment of plant, property, and equipment, intangible, right to use, non-current, as reported by the component. Now, this particular point is not only relevant for the component, can be relevant as a for group. Reason because a risk which is identified at the group level, from each and every component, I would expect that they perform some testing on that area so that I can get a comfort at the consolidated level. Now, when they, identify these areas over here, I understand that what auditing and what audit procedures are being performed at the group level, or rather, I give these are the minimum auditing procedures. These are the minimum things that you need to do. Okay. As a result, this particular point, or you can say, key audit matters are considerably are areas where, instructions are given to the components auditor that, okay, these are the key audit areas. These are the areas with the higher risk assessment, risk of material misstatement, and please perform minimum these procedures so that I can say that the work that you have performed is adequate for my purpose. Clear? That's why I refer to the key audit matter, because these are the high risk of material misstatement areas. Now here, once I will decide, okay, once I will have the clarity what work has been performed, then I can say whether the work is adequate for my purpose or not. And then, it is good. Otherwise, till that time, I'm not good. Clear with this? So I will do these two things. One, objectivity, competency. Second, your professional standards to understand the work that is performed. Any doubt? So let's quickly see the answer also. So first, assess the materiality. Yes, we will do, because to understand whether this particular component is material component or not, I need to assess the materiality. That is for sure. Okay. Then you need to evaluate component auditors, competency, independence, so that you can say, okay, I can rely upon the work performed by the component auditor. You need to obtain additional evidence in order to understand whether which professional standards were followed by the component, or what work has been performed by the component. You have to obtain that information. You need to then consult with the expert if required with respect to so there was some question, some hint was given with respect to the language barrier and local regulatory restrictions. If you see, local regulatory restrictions and language barriers. So for this, you might need to hire an expert. If there is a language barrier for the language translation and everything, you might need to hire an expert. Okay. And then you need to assess the impact over the opinion. So what was the outcome of all these things? And then you need to document. So this is how, these are the steps you need to perform. Clear? Any doubt? Any doubt, guys? No? Okay. Let's take up one more last question, and so that we can understand this particular topic in a much good way, and then we will proceed to the next chapter. It is kind of a detailed question. Okay. So the question is, ABC Limited acquired 75% of the equity shares of PVC Limited and DVC Limited on this particular date. On 30th 6 2022, ABC Limited also acquired 100% equity in this particular entity. ABC Limited was fully owned a subsidiary of XYZ Limited. XYZ Limited was engaged in manufacturing of construction equipments and heavy automobiles. While preparing the consolidated financial statement for XYZ and ABC Limited, statutory auditors identified the following things. The inventory valuation and the inventory provision accounting policy followed by XYZ, ABC, PBC, and DBC was different than the followed by A&O Limited. As per Ind AS 110, consolidated financial statement, if a member of group uses the accounting policy other than those adopted in the consolidated financial statement for the transactions and events in a similar circumstances, and appropriate adjustments are to be made to the group members' financial statement. That is kind of information given to you with respect to Ind AS 110, that if there is a different accounting policies, then you need to make adjustments. Okay, in preparing the consolidated financial statement to ensure conformity with the group's accounting policies. Okay, hence management of XYZ Limited passed the adjustments to align with the group's different account, so to align with the different accounting policy in the consolidated financial statement. So they passed the adjustment. As of now, we will highlight this particular area. Okay, hence management passed the adjustment to align with the different accounting policies. Fine. Then the financial year of A&O Limited is calendar year Jan to December, whereas the rest has the April to March. ABC Limited and XYZ Limited appointed CKC and Company Chartered Accountants as their statutory auditor, where PBC and DBT appointed NKL and Company as their statutory auditor. However, A&O Limited was not audited by any auditor. ABC Limited's prime objective was to invest the funds of its shareholder for the purpose of capital appreciation and investment income. Okay. So ABC's prime object was to invest the funds of its shareholders for the purpose of capital appreciation and investment income. Following is the extracts of the financial statement. So the that is given in the question. Now, one by one, we need to understand what are the questions. So, the first question. CKC and Company were of the opinion that they are required to prepare consolidated financial statements for ABC Limited and XYZ Limited. However, the management of XYZ Limited contended that they should prepare the consolidated financial statement of ABC Limited as it is an investment company. Kindly guide CKC Company with respect to the applicability of the consolidated financial statement. So here CKC, just to highlight, CKC is the group auditors or principal auditors. Okay. And the structure was like this way. ABC acquired two companies. First, that is PBC and DBC. Later on, ABC also acquired A&O Limited. Okay, which is outside India. Now, ABC was a subsidiary of XYZ Limited. So, this is the ultimate holding. This is the intermediate holding, and these are the subsidiaries S1, S2, and S3. So, this is a structure. Now, the question was that CKC and Company were of the opinion that they are required to prepare consolidated financial statements of ABC and XYZ Limited both. So, what do you suggest over here? What they should do? Come on, guys. So, should they prepare both the consolidated financial statements of both the entities or not? I'll give you a minute to read the question again. Okay, take a minute. The question again. This is in this particular area only. Sure. So if they are the for time being, and just let's see what was the requirement with respect to preparation of CFS. Quickly, we'll go to and have us. One, what is investment entity? Yes or no for the long term? So as a result, if I say today ABC is and it says that it's a prime objective, means that makes ABC as an investment entity. Now, if ABC is an investment entity, then ABC is XYZ. Yes?
Yes, sir.
Any doubt? No, basically. So here we were talking about consolidation. Okay. Now we will see one more question. Yes. Is anyone saying something? Doubt? No. consolidated financial statement as this is not part of the. So tell me quickly, what is the requirement with respect to adjustments that are passed? Yes or no? This much paragraph is given. What is missing over here? Come on, guys. Come on, guys. I expect this is straightforward question. Explain like what do you mean by related party transaction over here?
To identify related party transactions and related parties in the
No, with respect to the other matter paragraph. So as of now, think that whether the other matter paragraph which is given as of now is correct or not. If not correct, then what is missing in this other matter paragraph? This particular report. Okay, did we have audit? Now the question is whether the auditor was same. You need like financial information in respect of 4 subsidiaries. First of all, they were not the auditors. Now I'll go to and show you the real example how it is there. Other matter paragraph. Here, if you see other matter paragraph, the first line itself shows the difference. We did not audit because in the case here, if you see, only 2 companies are there, like XYZ and ABC, whose auditor is CKC and company. If you go to information that was shown earlier, this one, that ABC Limited and XYZ Limited appointed this particular charter accountants, but PBC and DPT appointed NKL and company, and there is no auditor for ANO Limited. So in this, to specify that we have not audited or we have not audited 3 DPC and ANO, we have not audited. And out of that, we have relied upon the report. In one of the case, we have not received any information or not have received the audited financial statement. As a result, I will specify the numbers the way it is given over here. If you see, the numbers are given for whose financial information and everything is reflected, and whose information was audited by other auditor, whose report has been furnished to us by so far, included on the report of other auditors. This particular paragraph from this particular line is missing, is not there. This is the main important thing, that you have relied upon the work performed by other auditor. And the case where there is no information available, in that case, whether that is material or not, if not material, then you will say, okay, this we did not get the audited financial statement, it was not audited by us or by any, was not material, or this component was not material, our opinion is not modified. Yes or no? You have to report. I hope now it is clear to you. Okay. Any again, I'll ask again. Any doubts with respect to any of the area?
Excuse me, sir.
Yes.
Can you please explain the question number 11 in the study material test your knowledge ka?
Question number 11. Just give me a minute. Limited. This is the one that you want to understand.
Sir, R limited is a new question which are added.
Just give me a minute. Okay. Yeah. So I have the question in front of me. R limited. Yes. Okay. So let me open this question for you. Let me explain. Give me a minute. Okay, this one, question number 11, R Limited. This one.
Yes, sir.
Okay.
Yes, sir.
Now, R Limited is a listed company engaged in manufacturing of round bars, and the company is having investment in the following components: two subsidiaries companies, one joint venture, two associate, three business entities under common control, interest in assets, liabilities, revenue, and expense in a joint operation with one company. R Limited and all its components are required to present their accounts as per the NBS. While preparing the consolidated financial statement, R Limited consolidates its component on a line-by-line basis by adding together like items of asset, liabilities, incomes, expense, and cash flow. R Limited seeks your advice on the accounting treatment in respect of above components for the consolidation in accordance with the company's Indian Accounting Standard Rules 2015. Now,
Into line item likha.
I am adopting, like, data I am adding into the data. So let's say, for example, subsidiaries. So I'll take the data of subsidiary, I'll add to the data of the consolidated financial statement or the parent entity. I'll do line by line adding. Okay. And then I will get the consolidated financial statement.
Okay, sir. Actually, this word getting confused to me with that what is line by line actually.
Each and every item in there, each and every, what you say, respective head, which was there in the parent.
Okay, sir.
That is chapter number 14. Okay. Just a minute. Now, chapter number 14, basically, again, there are two different units, basically, now. Okay. On the bank audits. So, audit of bank is a unit number 1. But when it comes to the unit number 2, it is the audit of NBFCs. Okay. To download the updated one so that you can. Just a minute. Okay. Now, this is the BOS portal that you have in front of you. Okay. What you need to do is you need to go to English or Hindi, but make sure you need to select applicable. The old one, this is there. Like the old material is over here and the May 2025 is there. So you need to make sure you select applicable for May 2025. Two sections, unit 1, unit 2. Unit 1, as I said, it is with respect to bank and bank audit, special features of the audit of bank. And unit 2 is basically your NBFC, special features of auditing with respect to the non-banking. Today, I will first start with unit 2. So that you can have a good understanding of, the amendments which are there in the unit 2. I'll take up unit 2 and then we'll shift to the unit 1. So I'll first start with the banking one. NBFC. Can anyone tell me the laws and regulations which are applicable to a NBFC? I hope you guys have read this chapter. Okay, I would expect everyone to answer now. This is very critical. So tell me which laws and regulations are applicable to NBFC. IRDA, yes, it can be very good. So I'll take it up over here. Absolutely correct. RBI is also there. Okay. Come on, guys. No? So I'm asking, which was the essay with respect to, where we get an understanding of laws and regulations that are applicable to an entity. Okay, no issues. These are the laws and regulations applicable to entities having direct and indirect effect. Okay. Now let's RBI regulations, directions. RBI Act is also there. Yes or no? So RBI Act, RBI regulations, directions, then you have IRDA, sometimes you have some, if that particular NBFC is, listed, then in that case, your SEBI regulations are also applicable. So the, will be mostly companies. So I'm talking about might be applicable to an NBFC. So this is the first thing that you need to get understanding which laws and regulations are applicable. Which is the main act which governs the NBFC? The main legal framework which governs the NBFC. Anyone? See, till the time you will not understand how these entities are working, from where, what is applicable to these entities, you will be not able to audit. So it is very much important to understand what is applicable to these entities and how. Yes, Sanya, very good. RBI Act. Yes, Jenny, very good. RBI Act. RBI Act is the prime, I would say, or very important, legal framework that is governing your NBFC. Now, there is a specific chapter in the RBI Act. I will show you that also, so that you guys can understand simultaneously. I'll show you from where, what, and how things are working. So we'll go to the level where we will have a full understanding about all the laws and regulations which are applicable, from where you need to see what is the scenario and how it works. So when I talk about RBI regulations, okay, there's a specific chapter in the RBI regulation. This is the RBI Act. There is a specific chapter in the RBI Act which governs your NBFC. And that is chapter number 3B. If you see in the RBI Act, you have a chapter number 3B which talks about provisions related to the non-banking institutions receiving deposits and financial institutions. Very important chapter. And this is the base that provides about things about NBFC. Okay. Now, what this chapter says that basically, I'll not go to line by line or section by section, but primarily this chapter provides you what is NBFC. Okay. What is NBFC and their NOF requirement. This chapter basically provides you about NBFC and the NOF requirement. Like if I go to a definition, okay, which is under section 45I. AF. This is section 45I AF. Okay, that talks about non-banking financial company. Now, non-banking financial company is a financial institution which is a company. By default, it is saying it is a company. A non-banking institution which is a company again, which has as its principal business or receiving deposits under any scheme or arrangement or in any other manner or lending. So keywords I will pick up, that is the NBFC. And third one, may with previous approval of the central government and by notification in official gazette specify. We will understand special NBFC or specific NBFCs that are not. Do you know, like, okay, I'll go to those specific MGFCs in a while, but do you know any example of specific NBFC? I have taken one example. You can say that is a specific NBFC. Yes, very good, Ujini. CIC, Core Investment Company. That company doesn't receive non-bank verified by the Reserve Bank through notification. That is the business of non-banking financial institution. See, if you see the point number B over here, or point number, we need to understand what is the principal business here is. What do we mean by principal business? So there is another definition which is given in this particular chapter itself, which talks about referred in clause C and business of non-banking financial company referred in F. So these are the business which can be, carried by the financial institution. and still they will decision of shares, stock, bonds, letting or delay, managing, conducting or supervising basically queries, collecting for any other purpose. Then yeah, very specific entities are covered. Any any further doubts? Okay, no doubts. Let's proceed ahead then. Now, this is basically, the two definitions which are given under the RBI Act. Now, if I'll summarize to these definitions, okay, what we will come to a conclusion is that when it comes to the NBFC is defined under section 45 IA, which then refers to two businesses. One, it refers to the F, one it refers to the C. C is nothing but which talks about financial institutions. And F is nothing but talks about other than financial institutions. I call it as a non-banking company. Okay. Now these are the two basically type of businesses which are defined under section 45 IA, because IA refers to CNF. And if any company is doing business which is defined in CNF, then they will be called as an NBFC. Yes or no? Now, if they are called an NBFC, then there is a requirement in one more section. That is section number subsequent to then only 45 IA. 45 IA places a requirement of registration and net on funds. And this is a specific section, special section. Reason because it carry institution is nothing but your clause C and F as defined earlier. So are now focus on this particular part. Or such other amount which is not exceeding 100 crores. Higher amount. Clear? Even under the scale after subsection 7, there is a X to avoid the duplication. Value of the debentures, bonds, triple effect. We need to remove the debentures, bonds, and loans. First was the investments. Now we are talking about BFC. Again, to avoid that loan, but amount is getting flowed. The restriction is that you can deduct to the extent of you can keep to the extent of 10%, not beyond that. Means this is till adjusted equity. Anything I will deduct, and then whatever I will get owned funds. Clear with this particular formula? Only 50.
यानी adjusted equity में से हम 20.
What I propose here is we will understand Okay. In this example, ABC had PBC, DBC, and ANO. Now, components is the responsibility of the management. And as an auditor, I need to make sure how and what procedures management has. Okay, let's say this, I'll take this example. And by that way, I'll not go name by name, but if I just go on this, we have 90 till here, and then so there should be some procedures which ultimate holding company or the company which is preparing consolidation procedures which ultimate holding company or the company which is preparing consolidation consolidated financial statement. Okay, step down subsidiaries, joint operations, associate companies, everything. And that is the where the role of auditor comes. Appropriate procedures or not. Now, very important part. Now, what are these scale-based regulations in the section? Like RBI will specify what they have specified. Master direction as of now, but again, these are scale-based regulations direction 2023. Basic question: direction and master direction. Anyone? Now we terminologies. Okay. Now, this particular point, this is very critical. This class, there are two type of classifications for NBFC. The first type of classification is, and the second type of classification is this scale based. I will come to the scale based regulation. Now what is function based type of? Now, when I say function-based classification for activity, when I say function-based or activity or function they are performing. If I have to give you some examples, then investment company, okay, that is again a function-based. Core banking, core investment, say they provide housing finance, NBFC housing finance, or HFI. NBFC, then merchant bankings, then you have companies with respect there, or you can say investment credit companies. That is NBFC infrastructure. Then you have MFI, finance institutions which provides to small people. Okay, now very much. You have an NBFC factors. Okay, based on some points and everything identified on the basis of scoring. These are the NBFCs which are something coming in the scoring. So they will do scoring of all the NBFCs, and usually top 10 NBFCs out of this top 10 scorer. Okay, who will get the top 10 score will be falling under the case of upper layer, irrespective of any other factor. So they will be determined on the basis of scoring. It can be NBFC-D, it can be ND, but once the scoring will be done, if that falls under the top 10 category or any other top that has specified by the Reserve Bank, then they will take it under the upper layer. And then comes the top layer. Top layer usually remains empty. Very critical to understand. Usually remains empty. Then why it has been created? It is created because when there is an increase in systematic risk, if any NBFC from here, okay, any NBFC has higher systematic risk or systemic risk, in that case, it will be transferred to the upper layer or top layer. So if a NBFC has a higher systemic risk, in that case, it will be transferred to the top layer. Okay, and and then that will be monitored based on the top layer regulations. Clear? Any doubt with respect to which NBFC and what are these layers? Any doubt? Okay, when I call this systemic risk, what is this? Basically, this is a risk of major disruption in the financial system due to failure of that NBFC. Means, let's say tomorrow this NBFC is very big, very big. If it fails, then financial system is going to crash. It will be a very negative impact on the financial system, whole financial system as a whole, or it will cause distress to other NBFCs a lot. In that case, I will say that okay, this has a higher systemic risk, and this will be transferred to the top layer. So this is how layerings are there. The higher the layer, the higher the regulations are applicable. Okay. So this is how the regulations, or the scale-based regulations are with respect to the classification, layer-based classification. Any doubt in understanding this layer-based classification? Any doubt with this? Because this is very important. Whatever we will discuss now, we will categorize discussion between NBFC, ML, NBFC, BL, NBFC, UL. We will discuss that. Because now whenever I will discuss, I will use these terminologies, BL, ML, UL. So you should be able to understand which NBFCs I'm referring to. Okay. Now, once I do this classification, then it comes the requirement. Then the requirements start for your, what you say, NOF and everything. Because each and every scale has different requirements. Each and every activity has different requirements. So we need to understand, okay, what are those basically activities or everything. So let's first understand with respect to NBFC, what is NBFC? Sorry. I'm sorry. Let's first understand with respect to NOF with respect to NBFC category wise. So now we will discuss net on funds. Remember, net on funds in Act, we saw a limit which was 25 lakh, but it was given that no, something else will be prescribed, and that if that is higher, then that is required to be followed. And yes, RBI has prescribed net on funds. So net on funds for NBFC, remember for different categories it was different. So net on funds for NBFC, ICC, NBFC, MFI, NBFC factor, that is by 31st 3, 2025 and by 31 3, 2027. Now what is this 31 3? Why we have 2 dates for NOF? Earlier, based on the old regulations, their net on funds was 2 CR. Old limit was 2 CR. Now, when new scale-based regulations came, they said no. Now we will increase to 10 CR. But rather than increasing, with one just click, okay, from tomorrow 10 CR, what they did is they provided a path. You gradually increase to 10 CR. That from 2 CR, first you bring by 2025, you bring up to 5 CR, 7 CR, 5 CR for any region. Any region means NBFC incorporated in northeast of India region. Okay. And then this is factor 7 CR. So by 2025, from 2 CR bring to this level, and by 2027, now everyone should bring to 10 CR. So gradually it was increased from 2 to 5, 5 to 7, 7 to 10. Not directly RBI said, okay, no, from tomorrow 10 CR directly, done. They increase gradually, and this particular from 2 CR to your 7 and 10 CR, ultimately, this is known as a glide path. Glide path to 10 CR, you can say, or glide path of NOF, net on funds. Okay. So this is the glide path, that how you need to increase your net on funds. So as of 31st March 2025, if comes for ICC MFI factor, you have to write 577. And if it is a northeast region for MFI, then again 5. Now what about others? What is the requirement for others? For others, basically, if I talk about, okay, for others, the requirement is that for NBFC, that is the infrastructure, companies, infrastructure debt one, IDF, IFCs. Remember, the NOF should be for both rupees 300 crores, because these are the big category NFCs. So their requirement for NOF is big. And for the rest, which is NBFC P2P, NBFC AA, not availing funds, and NBFCs, which are small NBFCs. So for others, which is NBFC P2P, NBFC AA, NBFC ND, that is not availing funds, okay, having any customer interface, the net on funds shall be rupees 2 CR. This is the net on funds requirement. Clear with this? Any doubt? Any doubt? No? Yes, no, you got full form of IFC. NBFC, IFC. Okay. So basically, see, when I talk about NBFC, IFC, okay, it is, you can say, it is infrastructure, what is it? Infrastructure finance company. And IDF is the infrastructure debt fund company. Any other doubts?
Here, you have mentioned some of NBFCs, the net on fund, but you have written that SPD and the NBFC-D related, these are not included in that?
The other NBFCs like this
Yes,
one,
yes,
DF, CIC, HFC.
yes, sir.
I'll tell you. Now, I'll come to that point. That's why, the first classification came into the picture. Now, the first classification was function-based, CIC, HFC. When I talk about function-based or activity-based classification, there is a separate requirement for them.
Okay, sir.
So they are separately classified. They have a separate regulations apart from the scale-based regulations. For example, CIC. There is a RBI CIC regulations which are applicable to only CIC. Housing finance. As I told you that housing finance is initially not required to be registered under RBI because they have a separate regulations applicable to them. So based on the activity also, if there are separate regulations, we need to follow that. I'll come to your question, Sania, in a minute. What if the NBFC is not able to maintain NOF or these things? I'll come to that. It's a very big thing to discuss because there are multiple things attached to that. But as of now, till this particularly clear, yes or no?
Yes, sir.
Okay. Any other doubts? Because that is this is the base that you need to understand first. Okay. Now the question comes is, what if they are not able to maintain this particular requirement, NOF requirement? What will happen? As your question was, what will happen if they are not able to maintain this particular NOF? Now, in this case, okay, to reporting, we will again come to the point that what if the NBFC is not able to hold NOF? So, as of now, just mark a reference, okay. If NBFC is not able to maintain NOF, then that NBFC is not eligible for certificate of registration or not eligible to hold certificate of registration. Okay. Plus, I will refer this reference to reporting. Very important, because at the time of reporting, we will again go back and see what are the reporting implications when NBFCs are not able to maintain the NOF. Basically, there is still some time given, let's say, for example, some time is provided to NBFC that, okay, you have to, comply with these requirements within this time frame. Basically, by the end of the year. If the NBFC doesn't have that particular NOF by the end of the year, bank may also cancel his certificate of registration. Okay, so there is the requirement in the act that, okay, if the NBFC fails to comply with any of the condition, like NOF or any of the condition, then in that case, bank RBI can cancel the license of NBFC or certificate of registration of NBFC. Okay. Any doubt? Okay. Now, if no doubts, then there is one more point that I specifically did not discuss till now, but it is important. Okay. You can say, when we were discussing about, definitions of NBFC, activity type in INC, 44IA in that CNF, that is non-banking company, and another was financial institution. Okay. Now, over there, there was a term which was known as a principal business. If I go back to your act, okay, in 45 IF, this from A it is coming, so I'll just remove to avoid confusion. This is 45 IF. Now here, okay, if a non-banking is carrying out the receiving deposit or such other institution, this is one. Second is your C, which is financial institution. But in both of the cases, they are specifying a term which is known as the principal business. Okay. In both of the scenarios, we are talking about the term business over here. Business of NBFC. Okay. Now, what do we mean by the business of NBFC? We saw that in C, what is financial institution. We saw in F, what is business of non-banking financial company. But in general terms, what is this business? What is this principal business about? Even, the term principal business is also again referred in 45 IA. In 45 IA, again, they are referring to business of a non-banking financial company. Okay. So the question comes is, what is this business about? What they are talking about, this business? So there is a definition of this principal business also by way of a notification. Okay. Now, what is this principal business notification? And again, that comes on the function based, something related to the function based. Now, when I talk about this principal business, okay, that is to have financial assets more than 50% and financial income more than 50%. So there is third category, or you can say for both of them, principal business means financial assets more than 50% of total assets plus your revenue from that financial assets or income from financial assets is greater than 50% of total income. Okay, is greater than 50% of gross income or total income, whatever you say. If these two conditions are satisfied, then I could say that the company has a principal business as a NBFC. Now let's take an example of CIC, or you can say investment company. Investment company, what it has as a asset? Investments in subsidiaries. So majority of the assets are that one. Okay, so I can say yes. Income from those financial assets means income from investment. That is either your dividend or capital appreciation. If that is also more than 50%, then it is an NBFC. So CIC is the best example to explain what is the principal business mean. Although they might not be involved in the lending or deposit accepting deposit lending or deposit accepting, still their principal business can be called of NBFC. So that is the principal business with NBFC, where no lending is involved, no deposit taking is involved, still they are known as the NBFC. Okay, so that is one of the point that I wanted to take now, because now we understand what is the function based classification and what is the net owned funds based classification. That's why it's very important for us to understand what is the principal business also. So sometimes NBFC will be classified based on the principal business, and then NOF requirements, scale based requirement, everything will be applicable to that. Clear with this? Any doubt? Any doubt, guys? Okay. Now, we need to understand certain more terms so that we can understand the scale-based regulations in more detail, and we can understand what is the requirement over here when it comes to the scale-based regulations. Okay. Now, when I talk about basically what you say, net owned funds. Apart from net owned funds, there are some requirements of capital. Okay, which are known as tier 1 and tier 2 capital. Okay, tier 1 and tier 2 capital. So what is this tier 1 and tier 2 capital and why we are studying? Because under the scale based regulation, there is a requirement to maintain tier 1 and tier 2 capital. So let's talk about tier 1 capital. Okay. Now what is tier 1 capital? Tier 1 capital is nothing but the own funds reduced by the investment in other NBFCs. So if you have a owned funds as a starting point, and if you reduce investment in other NBFCs, in that case, it will become tier 1 capital in a general terms. So you have to remove investments, you have to remove loans of other NBFCs in other NBFCs. You know, anything given on the hire purchase, lease, finance to the not only other NBFCs but subsidiaries, same group companies, whatever we have discussed earlier. Okay. So that is the tier 1 capital. So tier 1 capital is own funds, less investment, less loans, okay, plus perpetual debt instruments. Now, these are specific instruments. I will add it up. But as of now, understand perpetual debt instruments, okay, issued by NBFC. But again, it is only applicable to NBFC non-deposit taking, because these non-deposit taking cannot, take the deposit. So they can take funds through perpetual debt instruments. Okay, this is only applicable to NBFCD. Only applicable to NBFC ND. Okay. Otherwise, it is not applicable to anyone. And this is also 15, not not exceeding 15% of rest of the things. So restricted to 15%. Very specific case. Okay. So that is your tier 1 capital. Usually, for most of the NBFCs, tier 1 ends here. For most of the NBFCs, tier 1 ends here. Now comes to the tier 2 capital. What is tier 2 capital? First, I decided own funds. Remember own funds that we calculated, that was the net own funds. But if I talk about own funds, it is nothing but your own funds. Okay. Now, when I talk about tier 2 capital is nothing but you have preference shares which were not covered earlier. You have revaluation reserves, because earlier we only took free reserves. Then we have general provisions, okay, and losses reserves to the extent they are not attributable to the specific asset. So general provisions, you can say. Okay. Then hybrid debt instrument, against subordinate debt, a specific kind of debt, you can say. Okay. And rest of, I will over here, rest of your perpetual debt instrument, basically excess of 15%. The 15%, it was restricted till 15% here. Rest is allowed here. The rest is allowed in tier 2. Okay. So this is tier 2 capital. Whatever, other preference shares, revaluation reserves, other debt instruments, everything you have, you combine it, you will get a tier 2. Okay. Very specific scenario, these are debt instruments, not like perpetual debt instrument means these are perpetual. They will continue till the time, company is there. So that's why they are known as a perpetual debt instruments. Okay. Now, why we were understanding tier 1, tier 2 capital? Reason because now we will jump to prudential norms. So what are prudential norms? Or prudential regulations? And why we are referring all these things? Why we are studying all these things? We are studying just to understand prudential regulations. The purpose here is to understand this particular part. This is the main target. Now, prudential regulations are nothing but the way NBFC has to work, the way NBFC has to, do accounting, the way NBFC has to, do activities. So guidelines, you can say, guidelines around operations, how NBFC has to work. These are the prudential regulations. This is how NBFC has to do activities. This is how NBFC has to do accounting. This is how NBFC has to do financial management. Everything, when I talk about, comes under the prudential regulations. Now, because of that, in order to understand prudential regulations, we have to understand tier 1, tier 2 capital. We have to understand net on funds. We have to understand classification. We have to understand scale-based regulations, everything, so that we can understand the prudential regulations. Now, from here, these are the requirements. And why we need to also understand is because somewhere down the line, when it comes to the reporting, we have to report on the prudential regulations as an auditor. As an auditor, it becomes our requirement to report on the prudential regulations. So till the time you are not aware that what are the prudential regulations, what are the prudential norms for NBFC, how can you report? Okay, that's why we are understanding everything. So everything has a purpose. Are you getting the point? Why we are studying, why we are looking onto these things? Because everything has a point, everything has a a linkage to the reporting part. As an auditor, we have to do these reportings. That's why we are understanding. It's not just okay, this is what you say, okay, this is just a act we need to understand, regulation we need to understand. No, because when it comes to the real life reporting of the NBFCs, I'll just show you a glimpse as of now. We will go to these reportings in detail. But as of now, I'll show you the reporting levels for an NBFC as an auditor or as an NBFC that they have to do. Okay, just a minute. So basically, there are two types of reportings when it comes to the NBFC. One are supervisory filings that the NBFC does. One is the filing or reporting that is auditor has to do. Okay. When it comes to the report of the auditor, so I will just show you now. We will come back to that. So there is a specific direction by RBI which talks about NBFC financial companies auditor report reserve bank direction, wherein there is the way we have a caro. Similarly, on a similar level, we have this. There is a para 3 with respect to the materials to be included in the auditor report to the board of directors. A separate report is given to the board of directors by the auditor on the points which are given in para 3 of the directions. And what are the points? If you see, valid certificate of registration. This is nothing but directly linked to principal business criteria that we understood. Then you have company holding COR based on the net on funds. If they have net on funds, then they can hold COR. Otherwise, remember we discussed that if they don't have net on funds, they cannot hold COR, certificate of registration. Again, requirements of net on funds. Okay. Then over here, like again, other points like public deposit related things. Then you have other various reporting requirements in this. And if I talk about this, whether the company has complied with the prudential norms, the prudential regulation that we are talking about. As an auditor, we are required to report on this. Plus, there are supervisory filings which are done by the bank. Like, okay, whether the company has submitted a return of deposit in a particular format, NDS1. Okay. Now, there are certain quarterly returns that are required to be submitted under prudential norms. And if you see, I'll just show you the quarterly returns or monthly returns. See, there are audited returns which are audited by the auditor. These are balance sheet analysis, annual returns, interest rate sensitivity returns. A lot of things are there. Half yearly, quarterly review of accounts, half yearly and quarterly review of accounts, local area related things. This is again Form B for UCBs. Then you have NBFCs. Like these are the returns I'm talking about, which are required to be filed. NBS 02, S4, S08. A lot of things are there. Now, again, scale-based regulation that we are referring to. Again, there are many, directions and everything. A lot of things are there with respect to the regulations and returns. And everything goes back to your prudential norms. Yeah. So, prudential norms and scale-based regulations. So, basically, whatever returns are there, whatever, compliance is required to make, they are covered either under scale-based regulations, and in scale-based regulations there is a specific chapter of the prudential norm. So if I show you, these are the scale-based regulations basically that we were discussing. Okay, scale-based regulations. Now if I show you, there is a chapter in this. Prudential regulations. Now, this particular prudential regulations are basically, defines how the company, how the NBFC has to work. And these are again divided on the basis of, classification, how I tell you. Now, this is the prudential regulations, but these are applicable only to regulations applicable to only PL. When you go to prudential regulations for ML, it is different. It's not that much difference. There are few differences, but those are different. So prudential regulations for BL is different, ML is different. So till the time you not understand what is BL, what is ML, you will not be able to see, which regulations are applicable to which NBFC. This is how everything is connected when it comes to the audit of NBFC. Because at the end, as an auditor, I have to issue this report. Whether the company has complied with the prudential norms. Now, to understand prudential norms, I need to understand the scale-based regulation, and then I need to go for prudential norms, and then I need to, say, okay, they have complied or not complied. Clear? Any doubt? Any doubt, guys, till now? Because very, very critical. Whatever I'm saying is just a base for the intro, for the understanding of the NBFC, audit of NBFC. And yes, it is a bit, complex. That's why we have a separate, topic or chapter for this particular part. Because yes, it's a, a little bit complex area. But if you understand logically why we are studying this, why it is relevant, It is not that much complex. What is, Sunny, can you explain what is what? What is NBFC BL? Uh, NBFC BL is NBFC base layer that we are talking about. The layer, base layer, middle layer, top, upper layer, top layer. Remember? Yeah. So that's why it's important to understand these terminologies. Yeah. No issues. Perfectly fine. Any other doubt, guys? Any doubt? So we have to do a quick recap of what we discussed, okay, so that everything should be clear till now to you. First, we started with the definition, or who or what is the NBFC. Basically, we understood two different things. One is an act from where the requirement is coming, that is section 45, okay, section 45I, and then your subsection A. Section 45I subsection 8 defines the business of non-banking, which refers to three things. One, clause C, one, clause F. Clause C is the financial institution, clause F is a non-banking, okay, and then it talks about something as a business. So this is nothing but your 50-50 that we discussed, 50-50 ratio, more than 50 financial assets, more than 50 your income from those financial assets, okay. Then we understood what is financial institution with respect to NBFC. Then we understood what is non-banking financial company in F, that is lending, accepting, specific class specified by RBI. Yes, so that was in clause F. So that is NBFC, basically definition of NBFC. After that, we understood the requirements of net own funds. Like, okay, if there is an NBFC, then they have to register and they have to obtain net own funds. But when it comes to the net own funds, at that time we understood what is net own funds, how net own funds are calculated. Okay, so we had a whole formula for the net own funds we discussed. Okay, what is restricted, what is not restricted. Until this point, we have own funds, and then we have the deductions and everything. Okay, then after understanding the net own funds, we understood the requirements for the net own funds. I'll also refer to the study material. I'll open it for your reference. Then we understood, okay, this is the categorization of NBFC. Okay, that NBFCs are on the basis of activity. Okay, and on the basis of scale based over here. Scale based categorization. Okay, there are certain NBFCs who are exempt from registration. So these are exempt from registration because a separate regulation is applicable to them. Now, coming to the scale based regulations, we discussed about base layer, again some containing some NBFCs, asset size below 1000 CR, P2P, NOF, everything, AA, okay, P2P, NOF, HC. Then we discussed about the middle layer, more than 1 CR, your SPD, IDF, HFCs, IFCs, CICs. Then we discussed about the upper layer. Again, with respect to the upper layer, based on the scoring, we discussed about, okay, these are based on the scoring. Then we discussed about, okay, after scoring, there's a top layer. Top layer usually remain ideal, but if there is a systemic risk from a specific NBFC, pick up that NBFC from upper layer and put it in the top layer for monitoring. Okay. These is the layer based classification. This is known as BL base layer, middle layer ML, upper layer UL, and top layer TL. Then we went ahead and understood the requirements of the net owned funds. For NBFC, NDSI asset size, usually 500 crore below 1000, they are known as a base layer. And being a base layer, they have a requirement of net owned funds of 2 CR. But to the NBFC, ICC, MFI, or NBFC factor, you have a net owned funds of 10 CR, but by gliding path. That by 25, you have to achieve 5 CR, 7 CR, 7 CR, and by 27, you have to achieve 10, 10, 10. Okay. So that is the NOF requirement with respect to the NBFC. Again, when it comes to the base layer, they have to maintain net owned funds of 2 CR at minimum. Okay. Then for the rest, category by category, the requirements are given. So that was what we discussed in the NBFC. Clear till now? Okay. What I expect from you for the next session, I expect that in the next session, this particular part, prudential norms, read this. Different categories, read this. What is the prudential norms? What are the prudential norms applicable? So when I will discuss, it will be very easy, okay, for us to discuss prudential norms. After prudential norms, okay, I will cover everything in the prudential norms. Simultaneously, I will show you glimpse of the reporting requirement. Okay. Why? Because when it comes to the prudential norms, we have to attend report also. And to report, we have to do audit also. So along with prudential norms, we have to talk about reporting. We have to talk about auditing those prudential norms. Okay. Then there is a classification of frauds. Okay. Then checklist, audit checklist is there. So you have to, I would request you to read all these things, so that by the time when we reach to the auditor report, we will be pretty much clear that what is required to be done when it comes to the reporting part. Because we have discussed prudential norms, we have discussed how to audit. Now it's just we need to discuss the reporting requirement with respect to that. Like remember the master directions and supervisory written directions that I just showed you right now. We will discuss that then with respect to the reporting requirement. So please read this. Otherwise, it will be, you may face difficulty in understanding. You can ask doubt, no issues in that. You should be clear with certain things. If you have read earlier, you will be able to understand the lecture. Very good idea. Okay, good, Sanya. I can take a rapid quiz also in the next session, start of the next session, to show that you have read or not. So I'll take a rapid quiz of something, some particular points from the NBFC part that we have discussed now. Trust me. Okay, I'll take it some quiz at the start of the session to demonstrate that you have revised whatever we have discussed, plus whether you have read it something earlier or not, next point or not. Few next points starting only. I'll take a rapid quiz and then we'll proceed to the session. Okay. If no further doubts, okay, just one thing, okay. If no further doubt, then I propose to, keep session till here, and then rest of the things we'll discuss in the next section.
So I have just one doubt. The first question that you discussed, the answer to the same is not given in the book anywhere.
Sorry.
Yes, sir. In the beginning of the lecture, when you were discussing the question, the answer key which you showed is not in the book. I couldn't find that in the book.
These will be uploaded with the notes. These questions. So this is not in book. I'll give you the answers, but again, everything is there in the study material. It is something which is coming from the study material itself. So you can just, I will also upload, but if you have read the study material, it is the same thing.
So, but I've read the study material, it was not in the book. And suppose a question like this comes at exam, from where would we write?
See, again, one important point I'll tell you. In exam, it is not like that you have to pick up some paragraph from the study material and then just do a paste over there. You will not find direct answers. It is not the case that everywhere you find direct answers. Let's say, for example, in certain chapters you have a summary given. For example, when you say chapter number 6, 7, 8, you don't have the detailed standards, you have a summary given. Okay. Over there, what is the scenario is, the reason because is, when it comes to the writing the answer, you have to write the answer by applying the concept that you have studied in the study material or in the lecture. So that's why you might not find the similar words over there in your study material, or let's say, for example, steps. But that is something we expect, that okay, after attending the lectures or after reading the study material, you will be able to write those steps. Okay, but still these are part of the notes. They are uploaded, they will be uploaded after the lecture. So once we as today's lecture got over, so chapter number 13 notes will appear. Now chapter number 14 will appear after completion of chapter number 14. Jenny, I'll take it again with the team. I'll see what is the scenario. I'll come back to you on that.
Yes, sir. Please upload the chapter number 12 notes.
I have already which chapter?
Chapter 12.
It is there. Like, if you are only now missing chapter 12 or also
No,
anything
sir.
else.
After chapter 6, there is not any notes are there.
Because right now also, if I can see, these are there. I can see in front of me.
Sir, I have login in the boss portal also.
Okay, let me check again with the team why this is happening. Why
Yes.
they are not appearing. Because batch 3 notes till, even chapter number 12 notes are there. Okay, let me check with the team.
Yes, sir.
Yeah. If no further doubts, then I propose to keep the session till here. Okay. Thank you guys. Thank you for participation in the session. Thank you very much. Happy Makar Sankranti. I'll see you in the next section.
Thank you, sir.
Thank you. Yes, sir. Session over.